100 pages, 3 months of work, and a complete and utter waste of time. That's what analysis paralysis can do to your career. It certainly did to mine in the early days, and I want to help you avoid that fate. I'm Mike, and for over a decade, I've worked in finance at companies from the Fortune 100 all the way to brand new startups. Over that time, I've done more analysis than I can possibly count, probably 5 or 6 a week. Earlier in my career, the majority of my analyses accomplished nothing, changed nothing, and wasted mine and everyone who had the misfortune to look at them's time. In one particularly frustrating analysis that I mentioned at the start of this video, I built a 100-page deck. I combed through a specific part of my business, built a gigantic model, took multiple executives through it over the course of months, reiterated, improved, and at the end of the day, the highest executive said, "Thanks, this will be a great reference," and it was never spoken from again. So in today's video, I'm going to show you the framework I developed after that disappointment that helps you quickly turn financial data into actionable insights. Trust me, your career will thank you. Mine certainly has, as I credit one of my biggest promotions from this strategy. Stick around to the end because I am going to share with you a bonus tip and free resource that will absolutely supercharge your ability to drive action. And if you're new here, make sure to hit that subscribe button and ring the bell so that you never miss out on our weekly finance hacks and insider tips. I post a new video every single Monday, and trust me, you do not want to miss what we've got coming up. So, how do you quickly turn financial data into actionable insights? Well, over the last decade, I've tested and tweaked a framework that will put an end to analysis paralysis. It extends the project to before you even start an analysis and takes it after you've delivered a recommendation, so you can do everything in your power to make sure your work drives action. And again, I credit this framework almost entirely with one of the biggest promotions and biggest leaps forward in my career. Before you start, it's critical to understand what the purpose is for an analysis. It's not just about crunching numbers, it's about solving business problems, spotting new opportunities, and managing risk effectively. Each analysis you start should have a clear end game, whether it's improving processes, driving growth, or mitigating potential pitfalls. If you don't have one of these three, don't start the analysis. First, improving processes. This is where you use an analysis to identify inefficiencies and then propose solutions to correct the inefficiencies. Driving growth. This can be identifying new markets or customer segments, uncovering the potential for product improvements or expansions. And then there's managing risk. That's detecting patterns of fraud or non-compliance with policies, as well as monitoring market trends and potential risk to the business. But all of these things have some type of recommendation and action to improve the business. Again, if you don't have one of these three, do not start your analysis. So let's get started with the framework. This framework has 9 parts, and I'm going to take you through step by step using a live example in Excel. But first, let's go through the framework. You want to start by defining the outcome. That's what we talked about in the last step. Making sure that there's a clear near-term deadline and that there's an executive champion who will help take this work through to the finish line with you. You need to identify the key questions and data that you need to answer and what data can provide those answers. You have to stay focused on the essentials, otherwise you will be pulling data and doing paralyzing analysis for months. Then you want to gather targeted data. You only pull the data that is directly relevant to your questions. This will help keep you very streamlined and effective. As you pull the data, focus on the key insights. Find 2 or 3, no more than 3 key insights that you can pull from the data. Double click into these, and these will become the driving force of your recommendation based on the insights you can gather from these 2 or 3 things you double click into. You want to model the impact. If you're making a recommendation, you can't just say the recommendation based on what's happened. You have to say what this could look like for the company going forward. After all of that work is done, you develop your recommendation. Based on your insights and the forward-looking model, you craft actionable, keyword actionable recommendations that align with your goals. Then you craft your storyline. You create a compelling narrative around your findings that speaks to your audience and makes it easier for them to grasp and act on your suggestions. Then, when you present, you lead with your recommendation and then support it. Capture your audience's attention early and then sell them on why it's the best idea. And lastly, and sometimes I think almost most importantly, set a post-mortem follow-up. Part of this is to get feedback on how your analysis was, how you can improve in the future, and part of it is to follow up, make sure the action is moving forward, and see if they need anything additional to support the action. So this is what we're going to walk through now in a live Excel example. So open in Excel, I've got a report. This data set comes from Kaggle Online. It is a great resource if you want any test data sources. This is not sponsored. I just think it's a really great resource to do any kind of data science, analytics practice, things like that. I get almost all of my data sets from there. This is a sales data set for a group of retail stores scattered across multiple cities. You've been challenged to understand why revenue has fallen off after really strong growth in 2010, 2011, and why revenue went backward so far in 2012. So again, we have a tab with all of our sales data. We have a tab giving you information on the individual stores and what city they're in. And then I've done a quick pivot table just to kick this off, showing how far revenue's fallen, which is almost $4.5 million from 2011 to 2012. So what is the goal of this analysis? The stated goal is to find out why revenue fell. But let's go back to our framework from the beginning. The goal of this analysis is to drive growth. It's not to find out why we fell, it's to find out what we can do to drive growth and improve product and expand. That's our goal, okay? So that is our stated outcome, which is step one. The deadline for this analysis, well, we're going to do this in a couple of minutes, but a typical analysis like this, you don't want it to take more than 3 or 4 days. This is really critical. And of course, the best champion for this would be the sales executive or the managing director over this region. That's who you want to have taking this forward, someone who can actually take the action that you're going to recommend. Now, on to step 2, we need to identify key questions and data. Write down the key questions you need to answer and identify the data that can provide those answers. So let's start with what our key questions might be. So our stated goal of the analysis is to drive business growth by understanding the sales shortfall in 2012. Here are the questions. What drove the decrease in sales? Then we're going to say, we don't know the next part yet, so we're going to say why and why. We want to at least click in 3 times. Some people would say 5 times, but to avoid analysis paralysis, sometimes 3 is great. We'll keep going if we need to. So first, what drove the decrease in sales? Why and why? That means that the data set we need the sales. We need the sales by store and by city, and we need to look for any trends that are consistent that drove the down. Then we're going to ask why that happened and then why that happened again. We're going to gather the targeted data. That's step 3. For the interest of time for this video, I've already done that. Let's say you want to go to your company's financial systems, whatever you use to track your revenue, your products, whatever you're analyzing. You want to do kind of a big data dump, get the information you need so you can start working with it. In this case, I've pulled 3 years of the weekly sales by store. There's a little bit of information here, like if it's a holiday, just a few things that we know could cause a decrease if there was some, holiday timing. So we've pulled all that information in here. And now we're going to look for some key insights. So let's go to our pivot table and see if there's any key insights we can pull in. First of all, we'll pull in store type, and we'll see if store type has any impact on our sales. Okay, so we saw sales consistently fall across store type. Store type did not drive the issue with sales. Was the issue on or off holidays? All right. We do not see an impact here, so stores fell if it was a holiday or if it wasn't. So now let's pull in the store city. All right, and we're going to add a couple filtered columns here. So let's go to Pivot Table Analyze. We're going to insert a calculated field. Actually, what we want to do is we want to insert a calculated column, or item rather. We do not want to insert a field. I sometimes do tend to make that mistake. So now we're going to go 2011 minus 2012. Okay. So now let's see where we saw the biggest drop-offs. we're seeing a pretty consistent theme that our biggest markets fell the fastest. Isn't that interesting? So our biggest markets fell the fastest. Let's pull that out and just check to make sure, did department have anything to do with it? All right, let's pop that into rows. And let's see if the department did anything. Okay, now we're getting somewhere. A couple of departments really drove it. Okay, so we've got like department 2038. We've got departments kind of all over the place, and the departments are where we really saw some of the sales fall off. So now let's go back to our goal and see what insights we've gotten. What drove the decrease in sales? A specific group of 5 departments fell off in 2012. These departments had an outsized impact at our largest stores. And now, this is something we can't do here because this is another data set, but this is where you would want to speak to maybe the department managers for those departments. You want to get that qualitative data from the field if anything happened. You want to speak to the executives for the area. Say, are you aware of anything happening in our biggest stores or in these specific departments that may have drawn the downturn? That's where you get into this next why. So you go to people and say, why is your department down? When they say why the department's down, you say, well, why did that happen? And if you look across the business, what you're looking for are 2 or 3 key themes that you can bring back to leadership to adjust. Okay? So then what we want to do is we want to model the impact. So let's go back to our pivot table for departments. So let's say what would have happened if we fixed the worst performing department, and the worst performing department was department 72. All right? So let's adjust our pivot table. We want to filter for just department 72. Say, okay, well, the first thing we're going to do is we're going to fix our worst performing department. I want to look at that across my cities. And then we want to say, okay, we know the worst performing department. Now let's go find out where we want to focus. Okay, so now we're going to do some quick conditional formatting. And what we want to do here is we want to highlight our bottom 10 items. So who are the worst performers? All right, these are our worst performers. Let's say we're going to put all of our efforts in on these performers. And what we want to do is we're going to take these performers and we're going to bring them back to parity. Okay. Let's go here, here, here. There are faster ways to do this. I'm just trying to show you the gist. All right. And that all we're going to do, we're going to let these stores play out. So now I'm going to do my quick trick. I'm going to do a -1 here. We're going to copy that. And we're going to paste special, dividing by the values. All right, and there you go. So everything's been reversed. I'm going to slide this store adjustment over by 2. This is going to be our 2012 base. This is going to be our market growth. We'll call market growth 4%. All right, so then we're going to go pull in our 2012 base. We're going to take our market growth. And then we've got our store adjustment. And this will be 2013 forecast. All right, so then how does our 2023 forecast compare? So now we've got our market growth, we've got the store adjustment for where we're going to go fix that one department across our 10 worst performing stores, and we've got a 23 forecast. So let's see how we did. So we've taken it from 2 billion to 2.1 billion. Good, but not quite good enough. So this is where we would then have to go back and find some additional stores or departments where we can make improvements, because this is really a serious problem. But we've zeroed in that we don't need to fix the entire business. We just need to fix a few specific departments in the biggest stores, and we can start getting a lot of that revenue back. So now that we've modeled it, let's go back and see what our recommendation is going to be. Our recommendation is going to be, let's say we are going to fix the 5 worst performing departments in the 10 worst performing markets. This will recapture % of the lost revenue. Come back in 6 months and re-evaluate. Okay, so that's what our recommendation is going to be. We're going to go fix the worst performing departments, the 5 of them, into 10 worst performing markets. We're going to get 70% of our revenue back. Then we'll come back and reevaluate, make sure it's working, or we can extend it out if we need to pull in some additional revenue. Okay, we're going to craft the storyline. The storyline now is going to be based on where you get qualitative information from the field, and that's what you want to lead with. You want to lead with, this is not the entire business. We've identified these 5 specific areas and these 10 markets, which is the biggest problem. It's the problem because, go back to your why, because, go back to your why. Pull in that qualitative information from the people who know the business best. Now, this is where I want to pause and share my special bonus with you that is really going to take you to the next level. Because finance, at the end of the day, isn't just about numbers, it's about the people. And with that, we need to have a really robust way of telling stories so we can engage people and get our point across. So I want to share with you my top 5 storytelling frameworks for finance presentations. There's going to be a link down in the first pinned comment where you're going to find a way to go download this. I'll also send you my weekly newsletter with amazing finance tricks and tips every single Thursday, and I'll send you my free guide to 25 ways to use Excel in finance, in addition to this great framework for story presentations. All of that is completely free, and trust me, these 5 frameworks are all you need to craft every single presentation you'll do throughout your career. I have never had to give a presentation that didn't fit into one of these 5 frameworks. So now that you've crafted your storyline, you're going to present, and you're going to present with your recommendation up front, that you need to go after these 5 departments in these 10 stores, and that's going to get back 70% of your revenue. Once you've presented the recommendation, then you go into the why. You go into the data that you found, what led you to this conclusion, build some great visuals, tell your story using the frameworks I shared, and then talk about the next steps and what they need to do to implement. And then with the next steps, one of those next steps needs to be your post-mortem, which is our final step. Schedule a follow-up review depending on the severity and the time you need. This could be in a week, it could be in a month, it could be in a couple of months, to make sure that things are going well and they don't need any additional information. For a really big project like this, where a company's lost, $400 million of revenue, you probably want to meet a couple times just to make sure they have what they need. And that's the framework. So at the end of the day, if you take away just one thing from this video, remember that your analysis doesn't start in Excel and end in PowerPoint. It starts with people and goals and ends with people in action. When you extend your mindset beyond just the technical analysis in Excel and PowerPoint, that's when you start driving action, because your analysis needs to live within the world of your company so that you can truly drive decisions, drive action, and generate value for your company. And generating value, that's what will get you promoted. If you found these tips helpful, make sure to give this video a thumbs up and let me know in the comments which strategy you're most excited to implement. Don't forget to subscribe and hit that notification bell for more Finance Unfiltered strategies coming your way every single Monday. Thanks for watching, and I'll catch you in the next video. Until then, this is Mike signing off from F9 Finance. Cheers.